Everyone, welcome to this YouTube channel. Welcome to this great family. I believe that with time you get to know us and everything. So my name is Ivan. I'm the convener, the founder of this network, forex network, and our aim in this channel is to give quality content and content that will improve the trading of traders. You understand? Forex traders, synthetic traders, stock traders, any kind of trader that you are trading, kind of trading style, trading platform they are using. Because we notice that most traders who seek help on YouTube and through YouTube and everything, they don't find a solution, and it's unfair. We diving into the channel, I want you to please subscribe to this YouTube channel. Make sure you subscribe so that you can receive notifications from me whenever I post new videos. You understand? Because all our videos here are always top notch. So today I said I will be opening our eyes to opening our understanding to how you can see the market in depthly, and also how you can trade the market using a lower cost per trade. But what I mean is that your stop loss will be as little as 5 pips, 6 pips, 4 pips, 3 pips, 2 pips. You understand? I know it's mind blowing. You've not heard of that, right? I'll be showing you this video. I've used it to make trades, and I'm always using it every day to trade the forex market, which is helping me to scale up my capital. You understand? And also the capital of my clients daily. Hope you understand. So I will also be reviewing other trades from other weeks. And please, as we're doing that, stay tuned. Don't stop this video. Watch the end, because you're definitely going to receive something quality. So without further ado, let's dive into the chart. So we're in the chart already, and this is EU. I love trading EU. I love trading EU, GU. I love trading EU, GU, UJ, GJ. So many of them like that. XU. So many pairs that we love trading in the forex market. So let's dive in. Okay, so this is the 1 hour chart. First of all, what I love doing is I love knowing what is happening from the higher time frame, because that is the best way you can trade. You traders who are trading from lower time frame, 15, 30, 5 minutes, 1 minute, they are traders who lose money more. You understand? So I don't want to lose money, I want to make money, right? Yes. So that's why I like going to the higher time frame, that is H4 time frames, from H4 and daily time frame. So on the H4, on the higher time frame, that's you want to analyze. We will start analyzing from this particular week here, from this new week that was passed, from the 19th to 25th or so. Yes. So 19th to 25th or 23rd. So this particular week, from here to here, so these ones will be analyzing in this particular video. So it's gonna be wonderful, I tell you. So from the higher time frame, from the 4 hours time frame, we see that the market has turned bearish from last week. That is last week before this particular week. The market has been rocking on the bearish trend, right? It has been working on a bearish trend, just like that. It has been bearish, right? Good. So it would be nice for us to be trading, to trade bearish in this particular week instead of trading bullish, right? Good, because it will not be fair if the higher time frame is bearish but you are trading bullish. you are trading against the trend, right? You are trading against the bigger trend, that's the bigger investors, those one are pumping bigger money, who are moving the market, you understand, in their particular direction. So you need to follow them, you need to follow the banks at their back. So what I do is I go to the 4 hours and I know what is happening. Okay, so on the 4 hours time frame now, the 4 hours time frame is bearish as at 14th, that's for, okay, that's 19th of September. It's bearish, right? Good. So now that we know that the 4 hours time frame is bearish, what are we going to do? We'll boil down to the lower time frame, that is the 1 hour time frame, or any time frame of our choice, so that we can see the market more. Want to see the market, want to see those things that inside that we need to unveil, those inner circles, inner stores inside. So now the 4 hours time frame is bearish. We go to the 1 hour time frame to look for bearish opportunities. For bearish opportunities. So let's go now into the 1 hour time frame. So I'm in the 1 hour time frame, and this is good. So on the 1 hour time frame, this is the new week, 19, right? It's 19 of September. So the 1 hour time frame, you notice how you can delete this. Let's do this. Yeah. So the 1 hour time frame, you notice how price came all of a sudden from here to break this high, right? Break this high, right? And all of a sudden made it what? Turned bearish, bullish. So most traders who are locked in this circle, this is a calabar, this is a box, you understand? You'll be thinking that, oh, the market is now bullish, right? The market is now bullish. I think it's time for me to start buying. They don't know that they are wrong, right? Because anything can happen. The 4 hours time frame is bearish, so you should not be looking for bullish opportunities in a bearish market. So what I do is I see, okay, this is it. It broke this particular high right here, right? So market could not break this new high, because when I mean break, it will close above it. It will close above it. So it could not close above it, just give a manipulation. That's the week, right? So now we go down, we see how market came here to break this particular low, right? So now we're in the bearish trend. We've come back to a bearish trend. Are you with me? We've come back to a bearish trend. So what we're now looking at right now, we're looking for a bearish opportunity. So right now, see, we saw a break of structure here, during the week. Yeah. So you can see we waited for how many days? Most traders don't have patience. This was Monday, this was Tuesday, and Wednesday. So on Wednesday, there's a break of structure on Wednesday, right? So we waited for 2 days, full 2 days, to see this particular setup. So patience is always needed, right? So after seeing a break of structure, you align out your bring out your other block. Your other block, let me change the color please. Sorry, let me just change the color so I can see it well. Let me use this. Yeah, so this is the other block, right? This is our other block before the break of structure, which is this particular guy here, right? Good. So after we saw this other block, market broke structure at this particular side, right, and came back to test this particular structure, right? Good. So we now go down to 15 minutes time frame. I love using the 15 minute time frame to check, to verify before I place a trade. You understand? I use the 15 minutes time frame. After using the 15 minutes time frame, I'll now go down to the 1 minute time frame for entries. Are you with me? Good. So look at it. So on the 15 minutes time frame, we are looking for an order block, right? After the market broke this particular low, after the market broke this particular low, it came back to mitigate this 1 hour order block. It came back to mitigate this 1 hour order block. So we highlighted it, the 1 hour order block that mitigated, so it came back to mitigate it. So we're looking for the 15 minutes what? 15 minutes OB, right? So what are the requirements of a verified or a good OB? Is that one of the requirements is that it breaks structure. So you can see how this one here broke structure. You can see how it broke structure in this particular trade. Are you together? Yeah. How it broke structure here. So this is a real and a good OB. Are we okay? So let's go. Let's dive in. So we mark out the 15 minutes OB. So this is the 15 minutes OB. Marked out already. Let's do this one here. Good. So this is our new OB. But there's something I noticed about this OB is that the OB, like our bank point, our PY, is quite large, right? It's quite large. It's too large. So what I do is I refine it by 50%. So I take it out, and I refine it to 50%. This is where I'm looking at to start selling from. So traders who are not patient enough, you can place your sell limit at this particular point. For me, I decide to go to the 1 minute time frame where I see the opportunity clearer, and I get to enter using a lower risk to reward. Hope you're with me. So let me just increase this. So on the 15 minutes time frame, on the 1 hour time frame, on the 1 minute time frame, sorry, this is what I saw, a break of structure, right? Good. After I see a break of structure like this, we will now start looking for our what? For our bank point, our order block, right? Our order block where we're going to put our trade in, right? Good. So this is where our order block will surely be. This unmitigated order block right here, and it's at the extreme end of a trend. This is a short trend. Look at it. This is a short trend. You can see this is a trend, a trend that came with good speed. So order block occurs after this great volatility in the market, after this great push down, you understand, to the ground. You understand? You know that okay, there's something. Banks are doing something there. Something is happening at that particular point for the market to go in that particular speed, of light. Then that particular speed of trade. Sorry, I'm using light. Besides there too. That's why that particular speed of the market. And you should know that there's money being pumped in this particular range. So above it, at the extreme beginning of it, there is an order block, right? So we mark at an order block. This is an order block, right? Good. So these are OB. We put our sell limit at this particular OB. Very simple and easy. So my TP, my SL, I love putting my SL. This most traders they put their SL here, you understand, but because of spread and everything, because of spread and sometimes the market might want to shoot up a little bit. I move my SL to maybe this particular point, giving it space, breathing space. So if you check the amount of pips for this SL, can you see it? this is what 4 pips, 4 pips in this particular trade. Now let's look at it. Let's look at how this trade let's look at how this trade went. So I'll just mark out my SL. So this we go, right? Now mark out this way from here to this place. This is where we're targeting, right? Let me change this to green. We're being real here, we're being real. We don't play games at this particular point. So let's look at it. So you can see the way market came. Go to the 1 hour. That as well. So you can see down the 1 hour our TP got it, our break even, our first TP, which is that particular stock there. That's our first TP. Yes, that's our first TP. I don't like taking small profits. This market need to make it very well. You understand? To make a lot of money. Right? So that's our first TP. That's the 1 hour low. Then we start using what we call trailing TP, trailing take profit, right? Trailing take profit. You know, this is what we call trailing stop loss, where you're checking. If there's a break of structure, you end your trade, right? For me, I call my own trailing TP, where you check if there's a break of structure. So you can see market has been going, just like that. It broke structure here to the downside. That means we're still in a downtrend. So market could not come here to break structure. It came again, broke structure to the downside. We are still in a downtrend. So currently we are still in this particular trade. We're still making profit. And looking at this is massive. So we check the RR. You can see this is 217 pips. By just risking how many pips? We just risked 5 or 4.9 pips. Man, that is mind blowing. That is really mind blowing. So with this trade, you can use a lot size. When you have a small account like $10, you can risk a lot size of 0.1. You understand? If your broker is using a good leverage, maybe a leverage of like my broker, which is excellence broker. I love that broker so much. You understand? Which is 3,000. 1:3,000 leverage. You can leverage your account, and right now your account will have moved from $10 to what? $218 using just one trade. And this just happened in the period of what? Of just one day. So that's the importance of trading forex using this particular mechanical rules. There's some set of mechanical rules. So now let's go to another let's just quickly do this for GBP. So yeah, okay, let's do it for GBP. So you know the drill. You go to the 4 hours time frame. So in the 4 hours time frame, you check what is happening on the 4 hours time frame. So on GBP USD, you can see that on the 4 hours time frame, from the week before this, the market has been bearish, right? That's what has been bearish. So you need to be looking for bearish opportunities in this kind of market, not bullish opportunities. But it's the way I trade. I can also trade bullish in any kind of market. You understand? Because market do reverse. So when it's reversing, it's going up. When it's reversing any direction, if the market's original direction is bearish, then if it's reversing, right? If it's reversing, then it's reversing in the bullish direction. If the market is bullish, if it's reversing, it's reversing. If it's retracing the bearish direction. So the market has been bearish, right? Good. So this was the last low before this week started, right? Our market came there to break the low. So this is show that the sellers are not done yet with this market. Sellers are not done yet. So So the funny thing about trading is most traders don't know where the money is. They just let me just trade shares, support and resistance, blah blah blah. I'm not saying your strategy is not good, but you need to know, okay, what are the big banks doing? How can I join these people to take away traders, retail traders who are trading also in this market? What are my fellow traders doing? What will I do if I was the bank, if I was the bank trader, if I was trading with a larger firm in this kind of market? How can I use that money to manipulate the market and blah blah blah, just like that. So we know that fast time frame is bearish, right? So now let's now go down to the 1 hour time frame. 1 hour time frame. So the H1, this is where things get sweet, you know. You understand? In the H1, we see price clear. We see price clear on the H1. So this is the H1. This is from the 19. So on the 19, yes. It's on the 19. So on the H1, you can see the price came here, right? Price broke this low, came here to break this low again, but then the next thing we see is price coming here to break this particular low. Oh, let's not use that. Let's use this particular exchange here. The price came here to break this low, broke that low, also break this one here. So what we should be seeing right now is, okay, what's the market doing right now? The market is now bearish on the 1 hour too. So now we should be looking for a what? For a sell at this particular point. So you see, this is 19, 20, 21. We waited for 3 days to see this setup. Can you be that patient? It's a question. So answer that by yourself. So you can see this PI. Look at this PI here. Let me change this to give it more color. Yeah. So you can see this PI here. That is this order block. This 1 hour order block. You can see how big it is, right? So big, super big, man. This is super big, right? Good. Come in here. Oh, this is crazy, man. Okay, let's just leave that. We have to measure the 50% of this particular order block because we need to refine it. It's too big for us to use. So this is the 50% of it. Yeah. And boom. We now go to the 15 minutes time frame. So on the 15 minutes time frame, this is where we are looking for our trade opportunity, right? Good. So on the 15 minutes time frame, we now look to trade this particular. So you can see a break of structure here. This is an OB, right? Good. Sorry. The break of structure here, right? Good. So we draw out our POI, which is this particular OB here. Sorry, this is where the break of structure occurred. I'm so sorry. This is where the break of structure occurred. So this is our OB. It's funny, you know, that most traders are coming. So this is 137. Okay, good. Where there's a break of structure, you can see, for example, look at this. There's the break of structure here. Now, if you look at the extreme high right there, you see a long wick, a long rejection. This particular rejection is what I term as my, when I see this particular rejection, I use it immediately, because this particular stuff, this particular blue candle here, which is the opposite, which is supposed to be our order block, becomes useless, right? Because there is a greater OB, there is a greater POI here. So we just measure the 50% level of this particular candle. So now we can trade it, right? Measure 50%. Or you can just do a little refinement. So let me see the value of this particular okay, it's just 3 pips, so you can use it's just 31 pips, so you can make use of it. You can make use of it. So now let's go to the 1 minute time frame. So this is where things become serious. Yeah. So the 1 minute time frame, you can see the way market has been going. Market could not retrace to touch this POI, right? So we look for another opportunity again. Market came here, broke this low, could not retrace to touch that POI, right? So this is what I do. I look for another low again where it breaks. So it came here, broke this particular low, and came back to retest this particular POI, which is this other block here. This was our POI, our other block right here. Good. So you can see this is our other block, right, of 52 pips. Sorry, I said 52 of 5 pips, right? 5 pips. Good. So we leave space for what we call spread, because normally sometimes it is just like this particular scenario. You can see it came here, you understand? So if it came to this place, it might not touch your stop loss, but because of spread, the stop loss gets touched. So you just keep space for spread, at least a good amount of space that you know that okay, if this trade comes to this place, it cannot touch my stop loss. So we are using a stop loss of 8.8 pips. 8.8. This is GBP/JPY, GBP/USD. I know that GBP/USD is very volatile. So let's just check. Let's check this trade out. So we can see the way markets came here, and these are stop loss. Right. Good. Then take profits from here to this particular place. Yes. I'll take profit. Come in. There's no take profit yet. So let me just okay. Yeah. Good. So let's go down to the 15 minutes time frame. Yeah. So the 15 minutes time frame starts. The 15 minutes time frame. Let's start falling out. So markets keep going. There's no break of structure against us. Market is still bullish, and market has been bullish, still bullish till now. So you can see we are still making a whole lot of money from this trade. You understand? From this particular trade. Sorry that this video is so long. I just tried to explain so many things. So you can see we're in a profit of almost 500 pips. This is 455 pips. You understand? By just using what 8 lots, 8 pips, 8 pips. So you can see it, this 8 or 9 pips here. Going to this 8.2 pips. So you can use a lot size of 0.5. Sorry, I said 0.5. If you are using a small account, 0.05. And just imagine how much you have been there. This is normally should be $45 if you are using 0.1. So 0.45 times 5, that is a whole lot of money. You understand? That's like almost 200 something dollars. So you just took your account from $10 to 200 something dollars in just how many days? In just 1 day. So that's the benefit of looking from the 1 hour perspective, looking from an higher time frame to a lower time frame. You understand? Trading from an higher time frame to a lower time frame. That way you'll be able to trade less, be able to look at your chart less, and you'll be able to make more money. So when traders are making $5, $10 just because they just make money, and when they lose $20, they lose a huge lot of money. You're just there sitting, looking at them losing money, and you make your money when it is time. Hope you understand. So I hope I bring value to your table already. So please just help me to click the like button. Help me to subscribe, so that whenever I drop quality content like this, I do this review. I want to start doing this review every week, every weekend after a particular week. I'm going to see trades that you missed, trades that you should have traded, and you are free to use my strategies. You are free to use these mechanical rules. fast. It's gonna be wonderful. Thank you very much for watching.